the supply, the oil supply, is projected to grow. We saw the growth in 2025. That's primarily was driven by OPEC unwinding their cuts. So we saw an incremental 3 million barrels per day heading to the market. We project that the similar dynamics will continue in 2026. There are other batches of OPEC's cuts on the way, to be unwinded to the market. So we expect the supply increase by another around 2 to 2.5 million barrels per day in 2026. So in addition to the unwinding of the OPEC cuts, we see the bulk of the return coming from the outside of the OPEC producers, primarily non-OPEC, so-called non-OPEC group. And that group is led by US, Brazil, Canada, and Guyana, where the production in 2025 was their record high. So supply is on track to be increased next year. At the moment, we expect the increase by over 2 million barrels per day in 2026, which in its turn is expected to put the pressure on oil prices. Production growth is, as I mentioned, is going to be driven by non-OPEC producers and countries in particular. We still see US as being the leading producer in the world, and that obviously is followed by, in terms of the volume, followed by Saudi Arabia, and then further is down the list is Russia, and so on. So those are the three top producers in the world at the moment. But in terms of the supply growth, we see still a substantial spare capacity within OPEC, and this primarily sits within Saudi Arabia. So they have a ability to increase the production. But as at the face value, we're looking at the US as a top producer at the moment, and that's where the growth is coming from. It's going to plateau, and is plateauing at the moment, but it's at record high as we speak. Well, on consumption, and by looking at 2025, the demand has been somewhat very patchy. We saw a jump in a seasonal demand, and that came primarily from non-OECD Asia. China has been fairly flat, with the exception of that bump we saw during the summer mobility season, but it was sort of expected. Demand normally picks up at that time. India is where we see where the biggest demand growth is coming. Generally speaking, the non-OECD Asia is expected to add on the demand side. But India's share is somewhat limited. We're looking at roughly just under 5 million barrels per day, and demand growth there in terms of percentage, it was quite considerable, but in terms of the overall capacity is somewhat limited. So basically we see US demand has been again a bit at sort of, at flat. Europe is declining because we're losing some capacity. Similar thing, we're losing some refining capacity in the US. The only growth area is that Middle East and non-OECD Asia. There is also some loss of capacity in South Korea. There's That's mostly on petrochemical side. So it's overall, we expect the demand still to pick up by about 700,000 barrels per day to 1 million barrels per day. But again, that's versus the supply growth. We see that's widening balances in 2026. That I'm probably looking slightly ahead here, but that all has the way supply and demand unfolds in 2026, that all has an impact on the prices going forward. But in terms of the demand growth, we see that's coming from the non-OECD Asia. We're looking at the widening balances, and we also observe a substantial accumulation of the oil on water, and that's due to the current sanction situations that is unfolding on the market, the US pressure on the Indian and Chinese refiners to decrease the Russian oil intake. So that has an impact on the accumulation of the crude oil on the market. And that's in addition to the generally heavy supply that we observe on the market at the same time. So that volume has to clear at some point. And then let's not forget that the supply is increasing at the same time. So that will have an effect on the balances going forward. So that's something we are monitoring very closely, because that has a primary impact on prices. So far in 2025, we are pricing out at around $68 a barrel. We expect a slight tightening in the remainder of the Q4 at the moment, and there's a certain dynamics unfolding on the market as we speak. So we expect the 2025 to price out around $68, $69 a barrel. So in 2026, as the supply remains heavier, we see a further pressure on prices, and we expect the prices to recede to mid to low 60s in 2026. So the range we're looking at the moment is 60 to 65. Our model has a bit more specific level that we're looking at now, but it will depend on how demand will unfold in 2026. But the range we're looking at is between 60 to 65 at the moment. The investment level in the oil industry, it varies depending on the complexity of the oil extraction. For example, in the shale oil is much higher than, say, for example, in the Middle Eastern areas. But overall, the ballpark number we expect is about $500 million per year to maintain the oil production at the level we are looking at right now. That number has been kind of skirting up and down within about 10%. But nevertheless, the oil production has held quite strong. We saw an increase in 2025. We saw a considerable increase in 2024, and we expect that dynamic to remain in 2026.